introduction, the basic account concept and principle at the guiding principles in accounting set by the accounting body. It should be followed during the accounting process to use the financial statement product are fair and standard. Among the basic account concepts are money as a measure. Money is a unit of measurement in business transaction. By recorded, transaction is inquiry. It can make calculating transaction value easy. Each country has its own currency unit. The currency unit used in our country is the Malaysia ringgit. Very calculation will always be recording to obtain the value of the money used.
Hi everyone, I am Tasha. So I'm gonna explain on the importance of financial statements. Okay, so in general, there are 4 financial statements. The first one would be the statement of profit or loss. The second one would be the statement of owner's equity. The third one would be the statement of financial positions, and also the last one would be the statement of cash flow. So all these 4 financial statements are very important to internal users and also external users of a company. So who are these internal users and external users of the internal users? Okay, internal users refers to managers or employees who use this accounting information in making decisions related to the company's operation. So for example, the management of the company needs to understand the profitability, liquidity, and also cash flow of the organization every month in order to make the optimal operation decisions and to sort out the best financial decisions. So when we prepare financial statements, these financial statements provide us information that are needed in order to make the best decision or to face any kind of problem or financial crisis in the company. If it's an employee, this employee needs information and which can be reached through these financial statements in order to know anything related to the wages or their promotion. So the second one would be external users. External users are not involved in the operation of the company but hold some financial interests such as creditors, government, investors, and also customers. These are external users of the company. So for example, if it's a lender or creditor, so lender or creditor would be able to know the ability of the company to pay back all loaned funds and related interest change to financial statements. This is why financial statements are important to creditors. If it's a government need them to estimate the appropriate amount of tax that need to be paid by the company. So these financial statements provide all kind of useful information for this internal users and external users to make the best decisions. So this is why the financial statements are very important. That's all for my part. Thank you.
Hello, my name is Muhammad Izwan Biabakar, and I will be explaining about the possible adjusting entries necessary for making a financial statement. Under the accrual basis of accounting, some accounts in the ledger require updating as opposed to the cash basis. Revenues are reported in the period in which they are earned and not when the cash is received. Expenses, on the other hand, are reported in the same period as the revenues to which they relate. The concept supporting this is called the revenue recognition concept, and the matching principle concept, respectively. So I will base my explanation as according to the premise contended by automobile workshops. There are 3 adjusting entries that might be necessary before Automobile Workshop can make their final financial statement. The first one is the prepaid expenses, which also known as deferred expenses, which are items that were initially recorded as assets but are expected to become expenses over normal operations of their business. So, as according to Automobile Workshop's trial balance, the supplies account on 31st December is 7,500 ringgit. Some of the supplies included papers, envelopes and such were used during said month, and some are not used. It is usually easier to determine the cost of supplies on hand at the end of the month than to record it daily. So let us assume that on 31st December, the amount of supplies not used is total 2,850. The amount to be transferred from the asset account to the expense account is 4,650. As generally known, an increase in expense account will then be recorded as debits and decrease in asset accounts as credits. At the end of December, the supplies accounts should be debited for 4,650 and the supplies account should be credited with the same amount. After the adjustment had been recorded and posted, the supplies account has a debit balance of 2,850, which represents an asset that will soon become an expense in the future. Also under this category is the insurance expenses. Automobile Workshop had paid 6,000 ringgit for premium on an insurance policy on December, and at the end of the month only 500 ringgit of the insurance premium should have expired, as 6,000 divided by 12 we get 500 ringgit, and the recording of the remaining 5,500 ringgit of insurance expense will be delayed to the future occurrence. The insurance expense account should be debited while the prepaid insurance account should be credited by 500 ringgit. This is the insurance for 1 month. Once the adjustment has been recorded and posted, the prepaid insurance has a debit balance of 5,500, which in the future will also become an expense. Next is accrued expenses, sometimes also referred to as accrued liabilities, are expenses that were incurred but have not yet been paid. Some type of services is normally paid before they are being done, while some are paid after the service have been done. So we will continue to depreciation expense. Physical resources owned and used by a business which are permanent and have long life are called the fixed assets or plant assets. They are similar but not quite the same with prepaid expense because of their long life, thus putting them under a different category. Automobile Workshops fixed assets, which is put under the equipment, are used like supplies to generate revenue. However, as time passes, it loses its usefulness, which is termed as depreciation. Also under this category is the insurance expenses. Automobile Workshop had paid 6,000 ringgit for premium on an insurance policy on December, and at the end of the month only 500 ringgit of the insurance premium should have expired, as 6,000 divided by 12 we get 500 ringgit, and the recording of the remaining 5,500 ringgit of insurance expense will be delayed to the future occurrence. The insurance expense account should be debited while the prepaid insurance account should be credited by 500 ringgit. This is the insurance for 1 month. Once the adjustment has been recorded and posted, the prepaid insurance has a debit balance of 5,500, which in the future will also become an expense.
Statement of profit and loss is a statement which indicates whether a company make profit or loss. So for this company, the service revenue was 215,000, and the expenses are such as wages expenses, which is 75,000, utilities expenses, which is 10,000, rent expenses, which is 8,000, insurance expenses, which is 6,000, and also other expenses, which is 1,200, which brings the total net profit of 114,800. As for the statement of equity, the beginning balance of the share capital was 179,000, Meanwhile, the net income was 114,800, which brings the ending balance of share capital of 323,800.
Hello, so here I'm going to make a conclusion. In short, adjusting entries are necessary because a single transaction may affect revenue and expenses in more than one accounting period, and because all transactions may have not been documented during the period. Adjusting entry usually affect one income statement, revenue and expenses, and one balance sheet account, asset and liability. Let me give you one example: supplies adjustments. Supplies adjustment is needed as supplies initially record as an asset. As they have been used up, they must be expensed and the costs have been expired. So what happens if there's no adjustments? If there's no adjustment in supplies account, the asset, net income, expenses, equity will be overstated, which they will have more balance than they should have. The idea behind adjusting entries lies with the matching concept. Adjusting entries is important as it will keep the book in order and that it match revenue and cost to period in which we'll earn or incur them. Adjusting entries also allow the accountant to communicate with the more accurate picture of the automobile workshop finance, so that Mr. Bakat and Mrs. Sheila can read through the financial statements, knowing that everything that occurred during the periods is reported, even if the financial part of the transactions will occur later. That's all for the conclusions. Thank you.